Hey everybody, morning. How's it going? How's it going? How's it going? I see Sledge in there. And roll back up, see who all's here. Ed, Wade, Goose, Lieutenant Colonel Goose. Glad to have you, my man. Larry, Sergio, Eric, Michael, Craig, Rungemer, Philip, Svenborn, Roland, Kevin, Laura, Rex, Donald, Indy. Glad to have you, as always. And Everett, Carlene, Robert, Steve, Jaquise, John, Valerie. Hey everybody. Dave, I don't recognize your name, but hey, welcome. Dave 33, 333. Anyway, welcome to the show. Not a lot moving this morning. It's kind of interesting. The list's pretty dang short for the first day of Q2. I guess everybody kind of holding their breath. We don't really have a lot of earnings this week. We don't really have a lot of anything this week. Most of the financials will be kicking off next week. And I don't know. It's a interesting kind of week we have sitting here. When we refresh the calendar and grab this week, we have some ISM coming up. I don't know. That might move us. That might not move us. I don't know. Jolt's jobs tomorrow after the open. Like, we don't have any. I mean, that's not usually a giant mover of the market. PCE came in hot on Friday. We have the non-farm employment change stuff coming in Wednesday. Some more ISM, some more PMI, blah, blah, blah. We got Fed Chair Powell speaking. He was causing a little bit of volatility in the crypto market on Friday. And when he was speaking, and then Thursday, not a lot going on. And then Friday, we get the normal employment stuff. I mean, it's just probably a drift higher week, quite possibly. We did end up the month kind of at S&P all-time highs, kind of like I predicted. Now, might the end of the quarter be the excuse to pull back? Possibly. We've got a lot of companies. S&P 500 companies about 3 weeks out. It's a regulate. I mean, just instead of, I can't ever remember the number of days. PANIES. Rungemer knows it, but I don't ever remember. Okay, blackout period is a financial period where people, executives, employees, both, usually if you have knowledge of the inner workings of the company, you're not allowed to trade. And you can't transfer shares, you can't sell, you can't buy, you can't do anything. So stock buybacks are blocked during that span. And I think it's 3 weeks ahead of earnings, you can't do anything. And the S&P 500 stocks are basically rolling into this blackout period right here. And you can't really do anything. So for pension funds, it comes at a time when major changes are about to be made, and it blocks you out from doing any kind of trades. That includes the stock buyback programs that a lot of companies are doing. And in fact, that's been one of the major drivers of the market. Goose, Lieutenant Colonel Goose, and I have been sharing charts back and forth a little bit, talking about what are the threats to the market, and if this, yeah, there it is for 40 days. Here we go. Let's see. Analysts were previously forbidden from publishing research 40 days before. 10 days after the offering. I was looking for the specific ones on executives, but I'm not seeing it. Probably rolled right by it. Yeah, so it's up to the companies to self-regulate. The SEC doesn't actually prohibit it, but they do avoid any possible suspicion of employees acting on insider trading. So it's kind of like self-policing. They're not going to pass a law if companies behave, essentially. So, or they're not going to come after you if you behave. So it's a self-imposed blackout window, and it's not. No, I think the standard is 3 weeks, but it's not. Not formally formalized as a certain number of days. And rewinding to what I was saying, you just got to be careful in this window. Your companies are seeing their own stock as the biggest investment opportunity, and that's kind of been what's driving a lot of the move up. And the White House proposing to tax companies on stock buybacks. Well, I mean, right now, companies are like, hey, we can get rid of money, get rid of income by buying stock buybacks. And if they start getting taxed on that, you think they're going to continue that? No, they're going to find some other way to keep. I mean, the whole point of running a company is to keep the most amount of money and return it to the shareholders. So if you can't do stock buybacks to return to shareholders, what do you do? That's not I'm not an accountant. I don't, account for public companies. I don't try to dive into that level of tax code finagling, but it's going to change if that law, or whatever you want to call it, that bill with that I don't know, if that change goes through, if they start taxing companies on stock buybacks, and it was like a ridiculous, like 40% or something like that. Goose, you can correct me. I mean, you're the one that was bringing it to me. It's gonna cause it's gonna make a change in the way this is. And anybody that thinks we're like a free, anybody that says we operate on capitalism just doesn't understand. Like this is more corporatism than anything. Like where the corporations kind of control the puppet masters, and the puppet masters control the corporations, and it's I don't know. It's ridiculous. We're not in any kind of free market. The more they screw with everything, the less of a free market it is. But we're just here to trade, right? We're not here to debate the economy. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation, intended to be informational, educational, fun, entertaining, is not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do. I'm not here to give you advice. Basically, don't trade. I mean, don't buy stocks, don't buy options, don't buy forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries. Don't long them, don't short them, don't trade them. There's a substantial risk of loss in all of them. And let's be honest, if you don't trust gurus like myself, don't buy stuff from them. All right? Don't follow blindly. Be careful. Know what you're doing. I try to give you an edge. Try to give you some education every day doing this thing. And I don't know. I'm going to have to fix that. I don't know what that occasionally pops up. Anyway, what's moving today? And we're going to have to go to the futures to look. Taking a big bath as we came into the open. Look at that. Dropping out. They were hovering like open strong. I thought we were going to rally higher. Maybe go tag that target. We got really dang close. Making an all-time high overnight. And then plummeting right back to where we were on Thursday at the close. Market was not open Friday, in case you live in a well or, in a cave and just came out. Been in prison for 20 years and just came out. No, the market was not open on Friday. It was Good Friday. And we did get some PCE data that came in hot. We did get some Fed Chair Powell speaking information. So this came in a little hot, especially on the year over year. We saw not great numbers all the way around. And then I didn't really pay attention to what Powell said, but it did cause some volatility in the crypto markets. And here we are. We got the overnight pop. We brought it all back, and nothing basically. Going to open flat, looks like. The NQ futures, same situation, pop and brought it right back. We're seeing Russell futures pop and not quite bringing it all the way back. Getting close. And if you're like, JT, what the heck? ES, that's S&P 500. NQ, that's NASDAQ. QQQ, RTY, that's IWM right here. And we almost brought it back home. So there's a potential gap fill if we're going to continue to be weak as we get open here. And there we go. Oh, that goes right there. I don't have the overnight action turned on. There we go. Looks like it may fill that gap before we even get open. What a story. What a time. What a time. What a time. Like I said, there's not a ton on the list today. Oil, I think this could be the big winner. We're seeing some interesting information here that Putin may. It's funny enough. Yeah, Putin does an interview. He says he would rather deal with Biden over Trump because, well, Trump's a little unpredictable and Biden's just a kind of a puppet. So, but it's speculated that Putin could stick it to Biden by cutting oil supply. I'm not sure why that would. I'm not sure why, except that it would punish America, really, if they did that. Not necessarily support or deny him the White House. But if oil prices do ramp, we're going to see inflation ramping back up, and Biden's unlikely to get elected if we have higher gas prices. Let's be honest. Higher gas prices lead to presidents getting replaced. I mean, that's just the long and the short of it, right? This is consolidating before it potentially breaks on out. The 618 resistance up here, right around 340. And higher gas prices, we all see those every time we go fill up, whether it's once a week or once every 2 weeks or twice a week or whatever it is. We feel that very quickly. Very, very quickly. So that's one that higher oil prices, while oil prices and gas prices are not tied together, funny enough, they do kind of fly parallel. They fly in formation, but they don't fly. They're not the same pattern at all. And you can see diesel actually pushing lower here. This is showing a decline in demand for diesel. We break below this level right in here, and we could be pushing on down into this 236 area while we're seeing gasoline actually about to break out. It'd be a unique situation where we have gasoline prices going higher while diesel prices going down. Usually distillates kind of flow together, but that would be an interesting situation. We haven't really had that. I think the last time I really saw that, I think, was back in the 90s when I first started trading, where I saw it in a real way, where distillates weren't flowing together. I'd have to overlap these. Let's see. Let's see if this works like this, and turn this off right here. I think it happens on a small time frame, but not really. And they tend to, like, as you can see, they tend to fly the same a lot. And I'm trying to remember where it was. Yeah, I think it was right here. We saw gasoline shooting higher while diesel was pushing lower, and it did it like a couple times. And then diesel caught up. I don't exactly remember why I remember that, but it was short term. So if we do see this divergence, we saw diesel outperforming. Now they've come back together kind of here. And if we do see this kind of diversion at one point or another, diesel and or gasoline is going to, they'll come back together. So, long term, well, we'll see. If you look at it just year to date, I have to zoom her up a little bit and turn it down back down to a year, or back down to the daily. If we look at it just in the yearly, diesel severely underperforming gasoline. That's the divergence I'm talking about right there, right now. So it's quite interesting. This divergence will eventually come back together, but right now we're seeing diesel prices down, or diesel wholesale prices. These are wholesale prices. Diesel futures down while gasoline's up. Is that based on weak demand? I don't know. We look at it from the October lows in the market, diesel's actually kind of been lackluster, while gasoline ramping up. They do trade independently, and they trade independently of oil. So if we added oil on here, all these things trade independent. Oil hanging out right in the middle. So gasoline high, diesel fuel down here. And funny enough, the Rockefellers didn't really start making money on gasoline. Used to be something they took out back and dumped in the creek. It was a waste product until the gasoline engine came around. It was one of the big drivers, allegedly one of the big drivers. Original cars were kind of electric, and gasoline engine got invented, and they were like, hey, we've got this dirt cheap power supply that we can power those gasoline engines with, because it was just being thrown out in the creek. And that actually is what turned oil around into a profitable thing. In the beginning, oil was not very profitable when you were only getting, like 15% of a barrel utilized to produce diesel fuel and grease and stuff like that, and paraffin and kerosene. Then as we figured out gasoline, that's like upwards of 80% of a barrel. And they can fine tune the proportions just a little bit, but they were throwing away like 80% of a barrel. And once gasoline engines came around, it's been nothing but profit since then. Now, the further we go back, the different these charts look. And this is one of the handy tools I do with TradingView. You can just peel these back a little bit and pull up more data. We look at it from the beginning of last year. Now we have oil prices and gasoline prices kind of in the same ballpark, while diesel fuel has diverged down here. So anybody that tells you that diesel prices, gasoline prices, and oil prices all fly the same path, not exactly telling you the whole story here. All right. So do keep it in mind. If things are correlated, but they're not like causation, like oil prices going higher doesn't mean necessarily that we're seeing higher prices at the pump. So interesting stuff, eh? Anyway, I didn't even plan on talking about that today. Just all of a sudden went on a tangent. All right. GC, look at that baby go. That sucker. Holy guacamole. I was warning about this potential breakout. Look at that go. Beautiful. Now, how high does it go? Well, now we're getting into the bigger question. The bigger move, let's just clear all this stuff since we've blown it all out and it doesn't mean anything anymore. Really, on that chart, we have this giant pullback here. Our next level up, 2364. That's really the next level up, 2364. 2350, basically. Right up in here. We get above that, we're doing the bigger move. And the bigger move, we'd have to zoom way on out to get the bigger move. We have a 2400. And then if this is just a consolidation on the path, we're probably doing, oh yeah, like the proportions all just crazy on this chart at this point. And possibly 27, possibly 3,000. This is where things get crazy when you got to put it in log mode to be able to see all the moves. We could be talking 27 to 3,000 right here. And I mean, that could be, we could be talking about that next year, possibly 26. Could go faster, could get there late this year. So this is a gold breakout, and this thing could, gold's not a, when it starts going on tear, there's nothing moves like gold. I mean, maybe Bitcoin, but nothing moves like gold. So we could possibly see substantially higher prices in gold. This is why I've got a gold position I built back here when it was being lackluster, but it was looking like a breakout. Now you're late to the party. No FOMO, though. Don't get FOMO on me. All right. The preferred ways to play. I like GLD. I like GLDM if you're going to hold long term. I like NEM. If you're going to play options, GLD is kind of your ticket. If you just want to hold some shares, GLDM, much lower cost. I like NEM for the potential. We're just up off the lows here. We haven't even broken through the daily roadmap line. We haven't even gotten near to test it yet. Still got a ways to go on that. Getting close, but still got a ways. Oh, looks like we're there today. Beautiful. Finally got there. And if we can get above this zone, tip the odds to going higher. Put it on the higher path instead of the lower path. NEM has a great opportunity because it's a big, giant measured bounce. Big, giant measured bounce that could put this up in the $100 price range up in here. Craziness. Bitcoin getting a pullback into the open. Let's see if we can rearrange this chart. I'm just going to, hey, at this point, we're so high up here, all this other stuff. The only thing I'll lose is my, man, I don't want to blow all my marks off there. Let's just draw, let's see, clear. Trend line, clips, arrow. I don't want to clear those vertical lines. That's what I want to keep. And here we go, here we go, here we go. That's better. Nobody wants to sit here and watch me do that for however long it takes me to do that. Should be able to just like, I guess I could lock a few and then lock that one. Lock that one. All right. So we've got halving coming up out here. We had the spot ETF happen back here. We've got short-term bullish setup that we did. We're sitting right above that 618 level. So how long does it take to pop? That's a big question, all right? I don't know. This thing can get really sparky, though. We could be up here today. We are in what I consider the Bitcoin profit window. That typically lasts another couple days. Usually, we see a nice bullish pop in the 8 days around the end of the month. And that has to do with some other dynamics playing out. Now, long term, if you want to play Bitcoin's bullishness into the halving event, BitX, just buy some shares. Don't play options. I don't know what the time frame on this whole thing is. After this point right here, this halving event coming up roughly April 19th. We jump over here. Open too many tabs, it looks like. Searching for stuff. I was talking about crypto heavy on Friday, so if you're not aware of the whole thing, go check it out. We got about 2,700 blocks, 2,750 left to go. About 18 days. 18 days added to the first. That's roughly April 19th. Holding in line. And mempool.space, you can watch the blocks getting created. I keep talking about this because this is a big major event. Now, big major event, but it may have a negative reaction, just like we saw here. Could be a prolonged negative reaction, longer than this one, may or may not be. A pullback could lead to a lot of buying. I don't know if anybody can tell you for sure. I think they're full of crap. It's an uncertain time. We don't typically make higher all-time highs ahead of the halving. So this is a different, unique period here. Different pattern. We haven't seen this play out before. This one's not like the three before it. And for some other fundamental reasons I talked about on Friday, it's definitely not like anything we've seen before. Now, short-term upside target. We could see a pullback, do the halving, and historically, which right now we're not trading like historic patterns before, but historically, it has taken about 220 days past the halving to really kick off and make an all-time high on Bitcoin. Now, we've already made the all-time high, so that's already, you know, somewhat of a moot point. But 200 days puts us right around, 220 days puts us right around here. And then 200, you know, it's 220 to 240. So 240 right there. So first part of December, early December to mid-December, somewhere in that zone, we're probably looking at bullishness. Now, it's not guaranteed. That's just what we've done in the past. Typically happens about 220 to 240 days before we blast on off. But we're already blasting off. So how is this one going to be different? Could we just ignore the consolidation period and just go ripping? Entirely possible. Entirely possible. Ethereum is looking somewhat more bearish, though. This one not performing and keeps holding this resistance. And if we do a pullback that's similar to the first pullback, could put us right down into the roadmap line zone. You want the roadmap line? Links in the description. And if you're tuning in and you're like, hey, I want to be able to chat and I want to ask, I got a question that's burning in my mind. Just click subscribe on the other side over there. Click the subscribe button, the little green icon on the opposite side, and be a subscriber. A few minutes later, you could chat on the live stream. If I'm no longer live, leave a comment down below. There you go. Dollar is probably going up. That's confirmation that we're probably 70% likely we're going to go up right up here at this point. There's the target, right around 105.50. You may be like, how do I play that one, JT? Well, stuff like UUP is a way. FXE, FXB, FXG. There's a variety of ways that you could play. And speaking of FXG, EWG, look at this, baby. Not letting up. Ramping out. Being a voracious climber. Going for that high to that low. Next upside target, probably 33. So, and FXG. Trying to remember. That doesn't seem like the right FXG to me. Trying to remember. Yeah, you see, you have the FXE, Euro, the Yen, Canadian dollar, the Swiss franc. Yeah, currency shares, that's the one I need. There we go. FXB, FXA, FXC, FXF, FXY, FXE. Those are the ones, not G. And then, so there you go. I was thinking of EWG. VSTE, nice pop. That's still a nasty chart. Looks like a SPAC, but I don't know. Let's see. Alternative power generation. That has the chart the way SPACs look, but I wouldn't mess with that one bit. UPS still hanging below the roadmap line. Holding the 618 though. If we can hold that and ramp, break above the roadmap line, break above these highs, going up here. Otherwise, if we break down below this zone, it's coming down here. That's the simplicity of the whole thing. GLD ramping off. Beautiful move. Beautiful move. I would be careful. We're coming up into another resistance zone right around 109 or 209, excuse me. The bigger target I have up here, 220. It's been there for a while. 225. Then if we start breaking above that, 246, and we could go bigger term up closer to 300. NVE, what's interesting? There we go. Popping out of the box last week. But, so we did the gap fill here. Breaking above. Gonna have to make it. Now what we're looking for is a new high. At this point, that large consolidation, we'll probably go visit that up around that $40 area. And then we'll see what happens. Nail is an ETF of home builders that is leveraged. Being crazy. Wow. Looks like we're going to keep being crazy on that one. Let's see what DHI doing. Yeah. Keep on trucking higher. Hasn't done a reasonable retrace for a while. How crazy can she go? 187 next upside on DHI. Nail, I don't even have a great next upside. 161, possibly 200. UGO, Ultra Gold. Now, here you go. You want to put some fire on gold. You think gold's going higher? UGL, baby. That's kind of like BitX for gold right here. Now, looking at the bigger pullback here, potential to ramp right on up to 82 from 75 or 74, 82, possibly 100 up here. Not too bad, not too bad. Would I play options on this? Shoot, no. Be careful. This thing's going to have high management costs, and we could be looking at this. Look, now leverage stuff doesn't always follow pattern, so be freaking careful. But that 100 lines up right there with that bigger pullback. Ramp it out to 100, 125 up there. Not too shabby. MU. That one's being ridiculous. Have that bigger target up here around 150, 160. Just keep trucking. ALB. Still looking horrible. Still, as long as we're under the roadmap line, it's not very bullish. I don't care if it's on the biggest poppers list today. And since the open, it's declining. So MSTR. Retracing. Can it find support here? So this is the way. Let me take a divergence for a second. Typically, let's move down to a clean section of chart here where we can just talk for a second. Typically, when we get a move, stock retraces, finds support, starts moving up, and we're talking about like this, came up, did a retrace, starts moving up like this. Right here, when we cross this point, this 618 point, and we don't just, stop and chop and all this stuff. Once we cross that, we've become 70% likely to do that move right there. The next, the classic move that happens after that is that we retrace here, do that, retrace here, and we just ping pong between these fib levels. Why do I have the fib levels I have? Because those tend to be the ping pong levels. All right. And how did I come up with these? Watching the charts for 20 years. All right. Really, I learned fibs about 15 years ago. And I really, really honed it in about 6 years ago, where I started getting these levels really tuned in. And I've only been a guru for 3 years. So I've been using this myself for a long time, really honing it in. I keep making small tweaks to it as I'm able to prove it on out. But that's the kind of price action we typically see, all right? Ping pong, ping pong, ping pong on up through there. Now, sometimes we just go and clear a bunch of these off. Sometimes we just go ripping right on up to a higher level. And possibly even way higher. And then we get some retrace. And then we start ping-ponging levels. All right. Why am I cautious around the fib levels? Because we tend to get retraces around those levels. Now, when we go back and we look at MSTR, obviously didn't do that big drop. We've been up here. And grab the zoomer and zoomer up. Look, we popped that level, retraced, popped this level, retraced. Could we pop that level? Sure. Sometimes, they're always fuzzy zones, okay? They're not definitive lines. I try to always stress this. They are zones. Each one of these is a zone right around that line. We can go a little higher. We can come up a little shy. It's just a target area. That's why I draw them in big ovals. That's why I try to, draw bigger boxes that encompass the zones. Once I quit trying to trade to the exact level, I started doing way, way better. Because everybody can draw these lines. And like right there, we came up just shy, but that I'd consider that a touch. We retraced to this one. We went a little deeper and overperform sometimes. And then the next move, if we're going to hold this, would be a move right back up in here. Maybe. Does it have to? No. What's the indication we're not? Breaking that back below where that stuff is right there. You see how they kind of gappy, poppy stuff right there? We come back below that. Watch out for a bigger, deeper retrace. Now, MSTR, already pretty freaking crazy up here. Watching out for a bigger, deeper retrace is already a wise thing to do. All right. Like this little pullback, the last one we reasonably did and hit the roadmap line, we've already done the crazy extensions here. The next one up there, 3618. So be careful on MSTR. Nothing's given. I'm not even messing with it right now. Iron. Is that biotech? Biotechs do crazy stuff. Hard to chart. Incredibly hard to chart. Right down in this. If we're going to hold a bullish pattern on iron, we're going to hold this zone right in here between the 50 and the 76. Ideally, bounce off the 618. Turn back higher. Break back above that roadmap line, which should also be right around the vicinity of the 618. Going higher. Tips at 70% odds. We're going higher to 105. You just have to wait for the setup to finish setting up for the high probability patterns. Right now, initial indication we could see something bounce, but it hasn't done it yet. MCAF, and it's a biotech, so biotechs can just do their own thing. They don't have to follow the patterns. A lot of times they don't. That looks like a heartbeat. The SPAC. TM, Toyota Motors, getting a retrace. I thought we might see a deep retrace. We are a long way away from the roadmap line. We may come back and visit her right down in here. Yeah, we got through that target right up. Came shy of that extension. I don't consider that a hit. I think we just ran out of juice coming back down. If we hold support here, we can go for it again. If we don't hold support here, probably that low around 230 would be the indication. If we start getting a daily close below that, we're probably coming on back to the roadmap line. FDX, working on the push out, 301, possibly 320. Getting a little pullback today, but that doesn't really mean anything. The big picture, coin, just churning right there below the resistance. I kind of want to see this retrace for my own benefit. I'll probably buy a position if we pull back, hold, turn back higher. Otherwise, we need to get above this resistance for me to look for anything. The upside target's up here around 538, 676. I think this will go higher on crypto being crazy through the halving. DJT. Hopefully I don't have to say this 9,000 times, but probably coming back here. That's probably the end of this move. It's a non-log scale. Probably coming right back down. Now, I could just do a 620 retrace. That low to that high. We could hold this zone. That's why I've got this. Could find support. Maybe push lower into the 76 roadmap line zone area down there. If we get below it, probably coming all the way back down to the lows. And last but not least, Bill. Looks like we're working on coming on down there. All right. That's the list for today. I'll be back again tomorrow morning. Same bad time, same bad channel. Make sure you subscribe. Make sure you like the video. If anything I said was beneficial or helpful, informative, you learned something new today. Maybe I said something you liked. Maybe I said something you didn't like, and let me know in the comments and let me know in the chat. Have a great day, everybody. Stay safe out there. My bias for the day, dun, 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 for those that are still hanging in, bias for the day is extreme caution. I think we're going to push higher, but one of these little pushes out is going to be the end. I do have a target up here about 52.70. I think we're probably going to go pop that before the end. I just don't know if we pull back or whatever we do before there. So please be careful. 52.70, 5300. Probably one of these is going to be the last one. All right, we keep doing these little pullbacks and these little extensions. One of these is going to be the last one. Be careful. I don't know which one. Know where your support levels are. When we start breaking those, that's the indication. All right. Watch out, everybody. Watch out. Watch out. Have a great day, everybody. I'll see you later. Bye.